If that is the currency that we use to transact, then you have your stacks over here and you liquidate it as you need it. And that's how you protect your freedom and your choices. So yeah, they are going to do it into whatever the tool of barter is, whether it's CBDCs, dollars.
Lynette Zang discusses the potential impact of central bank digital currencies, CBDCs, on financial stability. She highlights the risk of exacerbating crises, the rollout process, and the crucial role of the underlying infrastructure. Zang delves into the potential for hyperinflation or deflation and the relevance of gold and silver. She hints at the future possibility of CBDC-denominated pricing for precious metals. The interview closes with hints about indicators for CBDC implementation, state-level resistance, and the societal context of financial change. Watch till the end for eye-opening insights into the future of currency and its implications.
If you go back a few years when we were going through the pandemic and all of the stimulus, they were saying how great it would be if everybody had that account. They already had the FedNow account in place, right? It's going live, but it's actually been in place for quite some time. And they said, look at how much easier it would be if everybody had this account. We could just push a button and there'd be a whole bunch of money in all of those accounts for people to go and spend and keep this economy moving, because it's a consumer-based economy. So, and their hope is that once you start using it, that's where your deposits will go, that you will choose to use it, expand its use, etc. And then they have you by the cojones. Because if everything you have is fiat, you cannot avoid it. Well, I think it depends on when it comes in, because without a doubt, we have to go through a hyperinflationary reset if the CBDC is indeed going to be the new currency, because we have to get rid of all of that debt. Now, I have looked and looked to see how they would justify bringing it out. In the current system, they create debt, and then that creates the money. So I have read where they're still going to do it debt-based, and if they do, they have to get rid of all of the debt that's out there. So we have to have, or hyper-deflationary, because they're going to sell it, according to them, they're going to sell it like, if you let us have these CBDCs and control it, there will not be any inflation. No, there'll be deflation, right? Which is the same thing. It's just the flip side of the coin. Yeah. It's really going to depend on the level of confidence that people have in the central banks, in the currency, in the CBDCs, right? If they don't have that confidence in them, well, then you're going to see gold go up dramatically. If they can say this is going to fix it, you're not going to likely see that, because a rising gold price is an indication of a failing currency. And so physical metals is where you would see it for the physical only market, which is where we're seeing it now. Well, you'll probably see it priced in terms of dollars and priced in terms of CBDCs, because the dollar is also going to have to be priced in terms of CBDCs. So the most likely way that it's going to come out is at a 1-for-1 ratio and basis. So if you think back to when they went to the euro from the individual currencies, right? Mm-hmm. What they did was they devalued the currency at a certain level first, about 17%, yep. Telling the public, we have to do this so that everybody is equal, and then we can go and make this transition. And then let's say it was 2 euros to buy a loaf of bread, and it was 2 lira to buy a loaf of bread. So it looks like it's the same because 2 for 2, but it took 4 lira to buy the 2 euro. So then you had a further 50% devaluation. The key is to have you think that nothing has changed. If you go to the grocery store and you're going to use the CBDC, you won't notice that anything has changed. Again, a rise in gold price is an indication of a failing currency unless it's loss of confidence. And we're witnessing this. I'm paying really close attention to what is happening in Zimbabwe right now, because they are in process of issuing a gold-backed CBDC that they want people to transact with. They came out with a 1 ounce coin. Well, the wealthy could afford a 1 ounce coin, but the public couldn't. Here's the thing, I did research on that. The only discussion has been to enable BRICS nations to use their own currency to buy from another country. There is no talk of gold yet because they can't do it until the debt gets burned off. I don't care what country you are, as long as you have unpayable debt, how can you go into something new? And this is the people that don't, it's hard for them to understand that you've got to stack now, and you've also got to put in place your food, water, energy, security, as well as your barterability, preservation, community, and shelter. And the time to get it done is now, not when the crisis is unfolding, because then it's too late for you to do anything. I'll tell you a new trend that I just found when I read a current report from Invesco. Now, Invesco is not about gold and silver. Invesco is about fiat money, mutual funds, and ETFs, and all that garbage, and bonds and stocks. But they did this whole report, and I hadn't seen this from anywhere else yet. And what they discovered, or what they reported on, is that more and more and more central banks are repatriating their gold. They're not holding it at the Bank of England and using it as collateral for trading, which they've been doing for a long time, easy to manipulate. They are bringing it home. What is that really telling us? That's telling us how close we are to collapse. Because if you don't hold it, you don't own it. And they know that. And everybody that's listening should know that too. Do you remember when Venezuela asked the Bank of England for its gold back? And what did they say? No. I mean, it took a long time to get it back. Ultimately, they did. But because if you don't hold it, you don't own it. And it really doesn't matter what your perception is. Physical gold held at home runs no geopolitical risk, will protect you from inflation, will protect you from any level of crisis. So, yeah. If that is the currency that we use to transact, then you have your stacks over here and you liquidate it as you need it. And that's how you protect your freedom and your choices. So yeah, they are going to do it into whatever the tool of barter is, whether it's CBDCs, dollars, where governments suppress the price of gold, and then, but in the black market, it's substantially higher in terms of that currency, but not as high as its fundamental value because they're taking risk. The black market is taking a risk of buying it and using it. So yes, I do think that we're going to see a lot of direct barter with the gold and the silver. They've got to have enough adoption. The last time I checked, and I mean, that's what a lot of these cryptocurrencies were about, was getting people comfortable and getting adoption. And the last time I checked, they had about 16% of the American population that on some level had done something with cryptocurrencies. But I think that what you have to look for is a big crisis that will force people, because you can't separate the CBDCs from the Fed now, but all of a sudden people are scared, they're losing their jobs, there's inflation like crazy, whatever it is, huge crisis, banks are imploding, because that ain't over yet, right? All the issues that made the ones that we saw implode, that's an issue for all of the banks. I like those states that have made gold and silver legal money. It's ridiculous that it is money, but have the states can the states overrule the federal government? But we are definitely seeing a rise where we had a rise of protesting, a rise of rioting on a global basis before 2020. And then 2020 was conveniently used to quash all of that, but it's rising up again.
Lynette Zang's discussion sheds light on the complex implications of central bank digital currencies, CBDCs. She emphasizes the potential risks to financial stability and the need for careful consideration during their rollout. Zang raises thought-provoking points about hyperinflation, precious metals, and the challenges of transitioning to new forms of currency. Her insights hint at potential indicators for CBDC implementation and the broader societal implications of these changes. This conversation offers a compelling perspective on the future of finance and the decisions that lie ahead. Tell us what you think about today's video. Share it with your friends, and like and subscribe for more informative videos. Thank you.